Great stuff. Gary, thing number 5, we're going to PCE, personal consumption expenditures. The PCE comes in slightly higher than expected.
Yeah. So, as we've talked about on this program before, there are lots of measures of inflation. Now, they're all manipulated, but the PCE, which stands for Personal Consumption Expenditures, is the preferred inflation metric that's used by the Federal Reserve. And the reason is that most closely represents what's happening to people's actual spending. Actual spending. As opposed to anything theoretical, like the CPI, which has, sort of a basket. Um, in this case, the annual increase of 2.5% was down just 0.1% from last month, but it was above expectations for 2.4%. The core PCE, that's the PCE excluding food and energy, was flat at 2.6%. That was also above expectations of 2.5%. And we saw a continued trend where income was up, but up by less than inflation. So yet again, people are taking in more income, but they're spending even more. Wage increases exist, but they are not keeping up with inflation. And so, that's an issue. The other thing, Rob, and I'm going to harp on this till the end of time. I don't care how many times I have to say it. But this report also said food prices are up 1.4% versus last year. Do you believe that number?
There's no way they're only
Right.
up. Yeah.
If anybody listening to this, if your grocery bill is up only 1% this year, put it in the comments. You would literally be the first person to tell me, no, my grocery bill is about the same as last year. I don't know anybody experiencing that. So, when we talk about these government metrics being adjusted, changed, adulterated, this is what we're talking about. You end up with some aspect of it that's just ridiculous. That said, people were saying, hey, we've got this great PCE. It's come down a little bit. It didn't come down. So the Fed should lower rates. Well, 2.5% is not the 2% they're aiming for. So, I'm not sure where that's coming from, but people are very excited to talk about rate cuts and have been for over 2 years.
I think the big takeaway that I have here is a common theme that we've had on this show, higher for longer, but we have higher for longer parentheses, probably exclamation mark. So
Yeah.
maybe moving a little bit off that line, Gary.
Yeah, and look, let's be clear. It's okay to not be 100% certain on things. You know, YouTube or Twitter, X now, is full of people who like to make bombastic predictions. But the market doesn't really work that way, and you have to look at things in terms of probabilities. So, in fairness, I have spent the last 2.5 years screaming higher for longer. We're not getting rate cuts. It's not coming. And, I thought it was ridiculous when people were calling for rate cuts 2 years ago. I mean, Rob, that just wasn't going to happen. And then I was really comfortable saying, absolutely not, you're all wrong. Now we're in a situation where, the private market economy is struggling. Powell and the Fed have been talking about cutting rates. They clearly want to. As we just talked about in the last segment, people I respect, like Mish, are saying, absolutely, this is happening. I'm about 50-50 on it, which I realize is a little wishy-washy. But, let's talk about the reasons. The people who are saying 100% we're getting rate cuts are looking at, one, market expectations, which have been wrong, and two, a private market economy that's tipping into recession. I agree with them on that. If I want to make the case that don't be so certain about a September Fed rate cut, uh, here's what I would point to. One, continued inflation still well above 2%. You got a CPI around 3%, the PCE around 2.5%. Two, aggregate GDP numbers that are still strong due to massive government stimulus spending. So, if we'd gotten a 1% GDP number, okay, fine. I could see that. That's kind of anemic at 2.8%. It's tough to cut on that. Three, as we said, market participants have been predicting rate cuts for over 2 years. So looking at market expectations, that has not been predicted. The market has been wrong for more than 2 years on this. And then four, like I said, You know, if the market's predicting 100% probability of something, it's pretty easy to take the under. You can't take the over. So I understand why people are saying rate cuts are coming. Eventually they will come. You know, do I think it's a big deal? Or some people are saying we're going to get a 25 basis point cut in September and nothing. You know, Rob, you know, I've been on this show earlier saying I think we'll get 125 basis point rate cut in December. Yeah, are we really disagreeing by that much? You know, if people are saying 25 to 50 basis point cuts, they're saying September, I'm saying December. I don't know that it matters that much. I'm just less certain that we'll get a September cut than some other people are for the reasons I mentioned.
Sounds good. Thanks, Gary, for clarifying that. And moving